Good evening. Welcome to the Rush Hour here on ET Now. I'm Vikram with the rush of news that we're tracking today, the 29th of August 2023. Up first, our global focus is on how recession risks may be falling. But yes, there is a trio of concerns that linger and loom large as real. That's our lead story. World Bank Chief Economist Indermit Gill has said that it is too early now to celebrate the resilience of wealthy economies in the face of rising interest rates. Mr. Gill has highlighted a toxic trio of elevated debt levels, the tighter financial conditions, and weaker growth prospects. Also, he has said that for many developing economies, these are often the ingredients of a financial crisis. The IMF's chief economist, Pierre-Olivier Gourinchas, has also opined that countries are now in a more fragile environment, especially after deploying resources to fight the pandemic. So all these comments are significant. Markets eagerly waiting for the Fed's next move later in September. So what are the risks to the global economy and the markets at large? Let's understand this with Anurag Singh, Managing Partner at Ansid Capital, joining us from Chicago. And Siddharth Sanyal is with us, Chief Economist at Bandhan Bank. Siddharth Sanyal, how real are the risks that are being highlighted here in terms of the post-pandemic growth across the world? Countries have struggled. At this stage, where are we at and what are the real risks according to you?
Well, these are two very distinct stories. In case of the global economy and various economies, various large economies, including some of the advanced economies, the risks are really quite significant because their debt levels had been significantly high. Financial conditions are tightening, getting tightened in a very significant pace. And also the growth prospects are not really that strong. On the other hand, if we compare that particular, the scenario which we see here, for example, in the context of India, the scenario is very, very different. Here, our growth prospect is relatively strong. If I see the nominal growth, that's quite strong actually. The debt levels are within limits. The financial conditions are not really, we don't have to go for that kind of tightening of financial condition. So it's a dramatically different story compared to some of the countries like India, compared to some of the advanced economies. So here, one particular thing is very important, that at the time of the pandemic, some of the economies had been very aggressive in terms of providing fiscal and monetary support both in a very front-loaded fashion. We were relatively more measured and nuanced, and that's why our recovery was relatively backloaded, but we are seeing the benefit of that nuanced and measured approach now.
Well, indeed, we have, but you did mention the dramatic nature of the difference between what we are seeing in the global economy and emerging markets like India. Anurag, markets typically don't like uncertainties, and these are uncertainties. The highlight, of course, right now is the fact that a financial risk is being raised as a red flag. How much of a concern is this for the markets, global markets, and of course, as far as the Indian markets right now?
So, Vikram, no doubt, ever since we have kind of put the COVID pandemic behind us globally, I think the markets have been struggling to get a wrap of what is the growth going to be, where will the next leg of growth come from, and how to value the markets in a rising interest rate environment. And I think I completely agree. I understand and I do share and I do wish India to do very well, and it will do very well. The point is we all have to see this in a very relative context. So doing well in 2000 to 2010 was growing at 8 or 9%. Doing well in 2021 to 2030 decade means growing at 5%. As long as we understand this larger picture, I think then we are good. So because then the expectations are well settled. And we can dwell into what are the reasons why that 5% is also good enough. And it's not going to be easy, by the way, right? Because there is a global backdrop behind it. That's the context, Vikram.
Yes, absolutely. So looking at the backdrop right now, there are these protracted trade wars that are playing out as well. Countries in various ways, Siddharth, they're fighting their demand-supply battles. And India is not far removed from that. How much of that is going to play out when you talk about global growth?
Well, we have to take into account that the large part of contribution in terms of India's growth do come from the domestic economy. So to that extent, we have a huge cushion to enjoy, and the domestic economy seem to be getting stronger over a period of time of late. But I completely agree with the point mentioned by my fellow panelists. Very clearly, a good recovery, good growth rate should not be confused with the strong growth rates that we used to see a few years back. This is a different setup, very different global macro backdrop, and I completely agree again that we should be happy with some kind of a mid to some kind of a mid-single digit growth rate should put us on a strong footing so far as the real GDP growth rate is concerned. We are exposed to the global trade cycle so far as some of our principal import items are concerned, and in some of the cases we are price takers. So we have to keep a close watch on that. They do have a very significant bearing on various macro parameters, including our inflation scenario, including our fiscal scenario, external balance scenario. All these factors are true. But broadly, mid-single digit growth rate, whatever is needed for that kind of momentum should broadly be supported by the momentum in the domestic economy that we are witnessing at this moment.
Yes, and Anurag, looking at these higher debt levels and the growing risk to global growth right now, when the Fed is considering hiking interest rates further to be able to tackle rising prices, how much of a challenge do you see to the financial ecosystem around the world? Already, concerns on regional banks in the US have been flagged off. When you look at that turning out to be a real crisis on hand, how severe do you think that could be, that we are not still seeing quite clearly? Visibility is not quite there on how strong the banking system around the world is going to hold up against these trio of difficulties.
So, Vikram, I think one of the macro backdrop of this global growth we saw, and I would say since 1980, there has been kind of a uniform, and India latched onto that later in, post 1991 and of course in 2000s. But broadly, the global macro backdrop of this stupendous growth, largely in US and European Union and the developed market, has been built, Vikram, on the back of lowering interest rates. Now, recall that US was at 16-17% interest rates back in beginning of the 1980s. It was trying to control inflation. Since then, and we call it the era of great moderation, which is that right from 1985 onwards till almost 2007, there was a single one-way global growth at the back of lowering interest rate. When you go from 16% to near 0%, this is what you get. And then it continued even last 14 years when we were almost at zero. Europe even tried a negative rate. Now that's where you say that, you've entirely juiced out what was your biggest lever, which is the cost of money. Now, once that is behind us, from there, Vikram, the only fear is if the recession, if the inflation comes back, which it is coming back now, you can't stay at zero. And rising interest rate environment is not good for assets. It is not good for banks. It is not good. Oh, it is good for banks, but not if they've not. I mean, there are other conditions, attached to them. But it is not good for consumer. It is not good for assets. Not good for any market participant as well. Because again, the overall value of asset drops, which basically, is kind of a negative cycle which sets in. So I think, Vikram, broadly, we'll have to acknowledge that, of course, there are higher debt levels. And then there are interest rates which already hit zero for the last 14, 15 years. And I understand India also had its own, we can't go to zero, but, even 5-6% was good enough, like a zero base for us. I think from there, if we have to balance global debt needs, deficits of the governments, inflation, as well as the macro environment, I think it will not be a one-way, uniform, directional view for any kind of assets. And that's going to be turbulent, Vikram. Add to that the mix of geopolitics and the okay, let's not call it anti-globalization, but let's call it a, re-globalization, right? That's also adding to the mix as well, Vikram.
Well, only yesterday we were having this entire debate because certain curbs have been put on imports of tablets and PCs. And that's something that the world is looking as a red flag as well. Siddharth, when it comes to central bank action, we've seen how it's played out so far. When it comes to government policies, to be able to tackle the trio of challenges before the world and as far as particular economies like India are concerned, how do you think government policies are going to be framed, especially in India?
Well, in order to address some of the near-term issues, the government had been really proactive. For example, if I pick up the recent bout of inflation, where the role of central bank can be relatively less, the government had been really proactive, had come out with a lot of measures very quickly in a very decisive fashion. This kind of initiatives are really heartening. I think there are a few areas where we will see a lot of government intervention, policy initiatives over the course of the next few months and next few years, possibly. Some of these things like weather-related uncertainties, climate-related uncertainties, which are on the rise, and we cannot really wait and hope and pray for a good weather, good monsoon cycle, etc. I mean, that's true for always, but that's even more relevant today and increasingly becoming more and more relevant today. So my sense is that some of the initiatives in terms of providing ancillary and support services to the overall supply chain, both in case of agriculture and manufacturing, will be very important. Over a period of time, skilling, reskilling, and right skilling of the labor force is very important, and we see a lot of initiatives there. So there are a lot of heartening signs there. It's very important to continue in a steadfast fashion in the same direction over a long period of time, and then only you reach the complete potential that we do have.
Well, to maneuver through the kind of uncertainties that the global markets are throwing up in terms of the challenges for growth in the future, that's something that will be watched very closely because that's where the differentiator lies. We've seen central banks move in tandem, but when it comes to policies, that is something where the government leaves itself enough room to be able to maneuver it depending on domestic demand and where they see global demand moving from here. And that's an interesting piece. But Anurag and Siddharth, many thanks for joining us with your perspective on this edition of Rush Hour.